Hey, what's up, guys? It is Tuesday, July 26th. Got the futures up on another screen here. Little pop in the market, so we'll see what tomorrow brings. And then I got my man Sam Shames doing a webinar over here. But for tonight's video, guys, we're going to talk about my favorite trade. I think every trader's got their favorite trade. So for me, it's pretty simple. Three things come together. I think we get one of the best trades out there. So with the dip in the market today, it's kind of like step one for us to potentially start getting this awesome setup. So we'll dive in, we'll take a look, and I'll make sure y'all are ready for the week ahead here. All right, guys. So to understand the trade, one important concept you got to have a good grasp of is the concept of reversion to the mean. So on my daily chart here, we got the 21 EMA, the white moving average, the mean. We've got the squeeze, we got the big three signals, of course, and then we got the Keltner channels. So these Keltner channels, the gray and the red lines, those measure average true range moves above and below that 21 EMA. So the gray lines, that measures 1 average true range move above and below the 21, and the red Keltner channel measures 2 average true range moves above and below the 21. So real quick, I'll show you the Keltner channel settings. Right? Factor of 1, length of 21. Make sure you got your average type to exponential. And then for the plus 2, minus 2. Factor of 2, length of 21, average type, exponential. So throw those on your charts, guys, and this whole concept of reversion to the mean, basically all this means is, generally all the market does, is make a move off that 21 EMA, typically gets to about 2 or so ATR, right? 2 average true range moves above that 21 EMA. The major thing you got to understand is up there at plus 2, there's a growing probability that eventually we're going to pull back to that 21 EMA. So that's kind of like the dynamic you saw here today. The semi's coming a little bit. A name like NVIDIA rallies off that 21, gets up there to plus 2. Then there's that growing probability we're going to pull back. So there's the reversion to the mean. And pretty much you had that everywhere today. You had it in ARC. Right, big push towards plus 2. Back down to the 21. So important concept, guys, because even if I'm going to take my entry based off of the 5-minute chart, the 15-minute chart, the 30-minute chart, what I'm really looking for is that moment in time where I've got my signal on a lower time frame. What I'm trying to catch, though, is that push from that daily 21 EMA all the way up there towards plus 2. So a good couple of examples here. 3 trades that we had last week, Coinbase, Cisco, and the QQQ. For Coinbase, we're right on top of that daily 21 EMA. So we're perched on top of the launching pad. Then we're going to look for that combo on the lower time frame. Right? Might be a 15-minute chart, might be a 30-minute chart. But we're looking for those lower time frame big 3 buy signals. When we can find that moment in time where the trend, the structure, the momentum all comes together good enough to trigger a lower time frame buy signal, that can serve as the entry that takes you all the way up there towards plus 2 on your daily chart. So that's what we did in coin. The trade in the QQQ that we had last week, right near that daily 21 EMA, there's plus 2. We jumped in, guys, in the 5-minute squeeze with the big 3 buy signal, which you'll see right back here. Okay? Just above your daily 21. There's your squeeze, there's your buy signal, there's your combo. That combo triggers that entire push off the daily 21 all the way up there towards plus 2. That's where we took the profits. A couple more examples, right? Costco. Really, really good example. Sets up at the daily 21 EMA. Then you got the combo on the lower time frame. Right? 30-minute squeeze with the buy signal. That takes you all the way up towards plus 2 ATR on the daily chart. So pretty much what we're looking for is that moment in time where we're on top of that daily 21 EMA. Then we're looking for lower time frame buy signals and squeezes. All that comes together. That can trigger that push towards plus 2. The point I'm trying to make, though, is if you look at Tesla, for example, there's a huge difference, guys. Really, really important stuff. There's a huge difference between the 30-minute squeeze that you had back here, right on top of that daily 21 EMA. Yeah. Find that squeeze of the buy signal. That can take you to plus 2 on your daily chart. That's exactly what that 30-minute squeeze did. There's a really big difference between that 30-minute squeeze back here and then the 30-minute squeeze that you had up there at plus 2 ATR on the daily chart. 30-minute squeeze, get the buy signals, all kind of falls apart. Then it pulls back. Right? Amazon's another good example. We had a couple nice squeezes here yesterday. Right? 30-minute chart with the buy signal. There was an hourly squeeze with the big 3 buy signal, but it all kind of falls apart, right? The difference is, the reason is, Amazon's up there at +2. Right? Tesla's up there at +2. Even though that 15-minute chart, that 30-minute chart, that hourly chart, they might look good, they might have buy signals, remember that growing probability now that eventually Amazon's got to come back home to that 21 EMA. So there's a really big difference where I think, ideally, you take the swing trade entry back here, find that moment in time, lower time frame squeeze, lower time frame buy signal, you catch that near the daily 21 EMA, that's kind of the swing trade entry. That can take you towards +2. These 30-minute squeezes up here at +2, I don't think you marry them. You kind of hit it and quit it. It's a bit more of a day trade. And knowing that in the background, we got this growing probability that we're going to pull back soon, you get out of there a little bit quicker. So that's the combo, guys. And that combo in this market, even though we're in a bearish market, it's made for some really good bullish trades. I showed you Coinbase. We took 80% out of that bad boy last week. We took about 80% out of the QQQ. We had a nice trade a couple of weeks ago here in Zoom. It's the same trade every time. On top of the daily 21 EMA. Not up there at +2, but on top of that daily 21. Then you run the big 3 scans, you're looking for that combo. The combo back here was your 30-minute squeeze with the beautiful buy signals. Makes for a pretty good push. One more example, then I'll show you a few things that are setting up here. We had a trade last week in Cisco. Same exact dynamic. On top of the daily 21. 30-minute squeeze. We jump into the buy signal. We didn't quite get the push towards +2 on the daily chart, but we caught a good pop nonetheless. So that's the trade, guys. Right? Step 1, find something trading on top of the daily 21. Step 2, get some big 3 buy signals on your lower time frames, and then ideally step 3, match those lower time frame buy signals with a couple of lower time frame squeezes. So, we got a big week here in the market. We got big earnings. We heard from Microsoft tonight. We got Google earnings coming up. Actually, no, we got Google tonight. So, big earnings is underway. Then we got the Fed on Wednesday, and you got the GDP report on Thursday. So, a lot of shit going on. But with today's dip, guys, this is kind of step 1 to potentially starting to, for us to potentially start seeing a lot of these nice trades here over the next couple of days or so. The S&Ps come back to that daily 21. The QQQ comes back to the daily 21. The semiconductors come back to the daily 21. The energy sector on top of that daily 21. You've got names like Roblox coming back to the 21. So a few things setting up here. The major thing we got to wait for are the buy signals. Right? Got to follow those pretty colors. So for a name like Roblox, something like the S&P, something like the QQQ, I got to watch this closely. We're right on top of that launching pad. If I can even get a 5-minute buy signal, a 15-minute, that can be enough to trigger that push towards +2 on the daily. So keeping a close eye here on Roblox, and of course keeping a close eye on the S&Ps and the Qs. Looking for another trade like the one that we had last week in the QQQ. Right on top of that daily 21. 5-minute chart goes bullish. 5-minute squeeze of the buy signal. That takes you to +2. So it's kind of the ebbs and flows of the market. Big push, +2, pull back. Understand, guys, right? Really understand. This all kind of gets invalidated under that daily 21 EMA. And I'm not going to jump in without a buy signal. So things have got to hold, and we got to start to print some green beans here. But anytime we pull back to that daily 21, want to be a little bit patient, look for that combo. So watch the S&Ps here, watch the QQQ. I think another name to watch here is going to be NVIDIA. Right, beautiful push last week, but in the short term, guys, that's not always going to be sustainable. That's a huge rip, 145 to 180. So the pullback makes a little bit of sense. Now the question is, does NVIDIA hold here, or does it all fall apart? If it can hold here, and then the 5-minute chart goes bullish, the 15 goes bullish, the 30, we start getting a couple of those beautiful big 3 buy signals. Might be setting up for an entry. So NVIDIA, AMD, kind of the same dynamic here. The semiconductors, the S&Ps, the QQQs. Watch them close, guys. Do not get long, right? Do not get long under the daily 21. So this all gets tossed out the old window if we can't hold the mean, but if we can hold support, and then for those of you with the big three, lower time frames start to go from neutral to bullish. That's the entry. Right? That could trigger the push back up towards +2. So one good example here is actually Eli Lilly. Big push towards +2. You get the pullback to that daily 21. Now we got the daily squeeze. We're kind of within that buy zone, and you got that beautiful combo. Mwah, the chef's kiss. 30-minute squeeze, 30-minute buy signal. Beautiful, right? Super, super beautiful. The key, of course, though, guys, is to try to get our entries as early as possible when these combos pop up. I want to get long at that daily 21 EMA. I want to catch that push all the way towards +2. Then I want to take my profits. So, from that perspective, there's kind of a difference here between taking an entry back at the 21 EMA, where I want to take my entry, or taking the entry right here. Visually, it doesn't look like much, right? It doesn't look like we're chasing it. But here's the best way to look at it. If that's the move you're trying to catch, the move from the 21 towards +2, you've kind of missed like half of that move. It's like showing up to the movie theater, and the movie you bought tickets for is like halfway over. You might enjoy the rest of the show, but you ain't getting the full shebang. So, this has kind of got the dynamic we're looking for. I would prefer to buy it just a little bit closer to that daily 21. Got to nail the entries, guys, but few things to watch here. Right? Folks tend to get a little bit, what's the proper term here? A little bit weary of getting long when the market pulls back for a few days. Just understand, right? It's all the ebbs and flows. So even if the S&Ps are going to rally for the rest of this month and rally, for all of August, not saying they are, but for conversation's sake, pretty unlikely you're going to rally in a straight shot. What's a lot more likely is you're going to get a nice rip, you're going to get a pullback, you're going to chop around for a bit, find some support, and then if those lower time frames can go green on the big three, that triggers the next push. But of course, you tap out here. You fade back under that daily 21. We ain't getting long. So I hope you guys find this helpful. Right? We'll run through those one more time. The S&Ps are back at the 21, but for now we're neutral. Can't get long, can't get short, can't do too much here without our pretty colors. The QQQ, back to the daily 21, and of course you got some big earnings this week, but we're neutral. So the 15, the 5-minute, the 30-minute chart going from neutral to bearish, we start to get the big three sell signal. Probably causes some problems, right? We're definitely not looking to get long. But if the 5-minute, 15, 30-minute go bullish, we start getting that green bean, could trigger the next pop. So your S&Ps, your Qs, your semiconductors, your energy sector, names like Roblox, names like Nvidia, and names like Eli Lilly, a little bit of that dynamic, guys. So for me, that's my favorite trade. Bullish or bearish. Right? Different context when we're looking to take these to the downside, but the same principles apply. So that's kind of the theme you'll see as of late out of all my bullish trades. Coinbase, 21 EMA, 30-minute buy signals. We're taking that towards +2 on the daily. QQQ, the 5-minute piece. Little 5-minute fella. Little 5-minute fella with a buy signal. Those can do some damage. So great trade there. Cisco, we kind of took a nice little base hit out of Cisco. But the key is, guys, we're taking this 30-minute squeeze on Cisco. Whoops. The key, of course, is you're taking that 30-minute squeeze right on top of that daily 21 EMA. Huge, huge, huge difference between that 30-minute squeeze at your 21 versus something like Tesla, who had a 30-minute squeeze yesterday. But up here, you're fighting that growing probability that eventually you got to come back to the 21 EMA. So there you go, guys. Hope you found this helpful. And for me, the way I'm finding these trades is just running the big three scan. So hope you guys find this helpful. If you haven't already, go on ahead and subscribe, and I'll get a couple more videos out this week. a couple more updates and kind of recap how our trading went from this week. But have a good night, guys. Be safe. If you haven't already, go on ahead and check out the Big 3 indicator. I'll put the link in the description. But for now, we got the dip to the daily 21. Right, that is step 1. For all these nice bullish trades to set up, step 2, give us some buy signals. Step 3, give us some lower time frame squeezes, and then we get busy. Talk to y'all soon.